Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about risk management, a little bit of trading psychology, Tradespoon services, some of the models that we offer, some of the services that we offer at Tradespoon, my view on the market, key support and resistance on levels, on spiders, and my number one goal is to make sure I answer any questions you might have about your Tradespoon subscription or any other questions about stock market. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. I do see a few new names. So this is your first broadcast, or just say hello, type in yes first inside of the questions. Always want to say hello, always want to welcome. It's all about community, right? I'm actually very proud and happy that we do have community of traders, investors, and I think it's important to be part of that community or any community and not to trade on your own and share the ideas. Collaboration is extremely important. My background, I've been more of a technology, right? I have master's degree in computer science. I got my master's degree in wrote a paper and program on artificial intelligence. That was 20 years ago. Right now, everybody's talking about artificial intelligence. Obviously, it has changed significantly in the past 20 years. A lot of progress has been made, but nonetheless, that's my background, right? It's in IT, right? Being a CTO, several publicly traded companies. And then started Tradespoon in 2012. So it's been more than 10 years. I want to say thank you to all the subscribers. It's because of you I'm able to do what I enjoy professionally, managing, trading my own money, building software, building model, and mentoring and teaching subscribers how to trade stock and options. Disclosures are very important. I encourage you to read them. If you're new, does anyone says new? Hello. Unable to hear you. Please use phone line or try to reconnect. Not sure. And then JYOT, welcome. Love it. Okay. So if you're new to trading, I encourage you to visit this link, optionsclearing.com. You can do it now, pause the screen, or you can do it after the session. But it's important to understand the risk associated with trading stock and option, right? There's always a risk associated with investing or trading. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm here to show you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade clicks will be profitable or will equal past performance. All right, now the disclosures are out of the way. Before we jump into a trading plan, which is important, right? Trading plan, trading psychology is important. Being a disciplined trader, right? Being a mechanical trader is extremely important. But let's talk about market conditions first. If you look at the stock forecast toolbox, which is again our model based on artificial intelligence, state machine learning, right? It's using neural networks, and we decide what data to feed, more all technical data, and makes prediction, for the next 10 days, makes prediction for the next 6 months. So today, model basically said 405 is support, 408 is overhead resistance. We're trading at 410. We've been talking about that key level many times. So we do have Fed decision, we have ECB decision behind us, right? Not a big surprise. I think kind of a status quo for the most part. Higher for longer, right? We had unemployment numbers better than expected, right? Good news is good for the market. That's why market is trading above what the model predicted, right? Model is not being trained or learned on the FOMC or ECB decision, or it's not being trained on how to analyze unemployment numbers. It just looks at the price action, at volatility, at the volume, and makes prediction. And if we didn't have any news today, probably we would be trading between this narrow range. But we did break to the upside, 410, because of better than expected unemployment number, not better than expected, but maybe a single or a double, right? A hit, baseball analogy from Apple, right? It wasn't a home run, it wasn't a strikeout. I don't know, we can argue about whether it was a single or double. And the market likes it. It has been oversold and reached 50-day moving average second time and retesting. So that's short-term prediction. Long-term prediction, if you zoom out to 6 months, basically model says, well, if I train on higher, bigger data set and I go back to past 20 years, I don't see a lot of momentum above 420, which is a year-to-date high, right? This is February, April, January high. We weren't able to break to this level. And on the downside, 405, right? Pretty narrow range. You can see the volatility is constricting, bands are constricting, and at some point we need to break out, right? And usually the breakout, you either break out to the upside or you break to the downside, right? Those are the two choices. So let's look at the spiders. Let's look at 1 week. Kind of try to ascertain. So clearly we are in some kind of a top building process, right? We've had that set up. I mean, for the past 6 weeks, we're not going anywhere. Here we were trading for 6 weeks. Here we're trading for 3 or 4 weeks. So we've had this setup many times where market usually trades, either on the bottom, right, 3 to 4 weeks, not making new highs, right, and then breaks to the upside, right. Kind of a well-defined pattern. Right, so we either break to the upside or to the downside, and it's been 6 weeks, probably one of the longest, similar to February, March. A lot more bullish momentum, and then we either pull back to the downside, right? That's choice number one. Choice number two, right? We break to the upside, right? So we're trading at 411, maybe 30 points to the upside, right? Or 30 points to the downside. In terms of earnings season, 75% of the companies already announced earnings. They're not as bad as everybody anticipated. Market obviously is holding on, so not as bad as anticipated. No really home runs, even Apple, 2 consecutive quarters of negative growth. They already projected that the third quarter will also be negative growth. So that's not a home run, but nonetheless, the bar is set very low. Everybody was worried about recession, but people are still buying iPhones. Maybe they don't buy as many MacBooks, but they are buying iPhones. So earnings season is kind of behind us. All of the microeconomic data is, every month we have a new data. So I'm not sure what the positive catalyst to the upside. I mean, it could be. It could be again that macroeconomic data is improving, right? CPI data next week, maybe we have a positive CPI, right? That CPI, the inflation data is going to come down. There is a 90% probability that Fed, based on the futures data, that the Fed will lower interest rates as early as October or September. So most market participants, or at least bond market participants, believe that the interest rates will continue to go lower and the Fed will start lowering. So the little disconnect from what the Fed says versus what the futures data and bond market says. But nonetheless, that is choice number one, right? Inflation, CPI data next week comes in better than expected. Earnings is better than expected, and and market still has a lot more room. It only retraced maybe half of its losses, right, from 480 to 350, 130, 60, exactly. So it's sitting at exactly 50% retracement, right? If you retrace 50%, maybe you can retrace another 30 points to the upside. The scenario number two is we still have uncertainty about regional banks, right? Seems like every week there's a new bank that has issues. There are credit default swaps on US debt, right? US debt ceiling also could default as early as June 1st. That's an uncertainty. Plus more and more news on commercial and residential real estate, and there are a lot of banks. I mean, all banks have pretty large exposure to residential and corporate real estate. These loans come due, interest rates are high, and that's a level of uncertainty. And if something does happen, then you do have, kind of a swift retest of December lows or March lows. So those are the two scenarios. As a trader or as an investor, I mean, it's a 9%, 10% move to the upside, 9 to 10% move to the downside. Whether you're a trader, right, aggressive short-term, medium-term trader, or you're a long-term investor, you want to kind of make a decision whether you want to get more bullish at this point or you want to get more bearish at this point, or at least consider hedging your position. So scenario number one, we go up 30 points from this level in the next few weeks as we approach the end of May, or we go down and retest March, December lows. Those are the two choices. Let's just think about this. This is a very important exercise, right? This is not just, I'm doing this just for the sake of entertainment. I'm doing this because this is at least how my mind works every time I get into a trade. Whether I'm doing day trading, right? I'm doing short-term earnings trading, I'm trading stock and options. I always think about, okay, 30 points to the upside, 30 points to the downside. Where's my confidence level? Am I more confident we're going to go higher, or am I more confident we're going to go lower? And based on my confidence, I decide how much money to invest. Then the question becomes, what's the position size? So right now, if I'm thinking about weeks, right, or maybe even months, that is my risk profile, right? Market can go up 30 points, market can go down. So if I'm bullish, I have to at least entertain the idea that we can get to 380. And 10% downside, that's my stop loss. So now it can tell me how many shares of spiders I can buy, right? So if I'm buying spiders at 411 and my risk is 380, 30 points, on $10,000 portfolio, we have a lot of these moves, right? 10% up, 10% down, 15% up, numerous in the past 2 years, right? In the next 2 years, we're gonna have just as many moves, 15% up, 15% down. So I don't want to be down more than $250 on a $10,000 account, right? So $250, if I risk is 30 points, okay, I can buy 8 shares, right? If I'm bullish and I believe in soft landing, Jerome Powell again said we can avoid the recession. The recession is not imminent; it could be avoided, and unemployment numbers have confirmed today his opinion. So I'm going long. My stop loss is 30 points. Okay, I can buy 8 shares, and vice versa, right? Let's say PacWest defaults over the weekend, market probably is going to pull back significantly. Okay, so if I'm short, so if I'm long, if we defaulted, then it's down 30 points. But if I'm short, and let's say, PacWest doesn't, we have positive CPI on Tuesday, inflation coming down, then we can rally 30 points, right? So whether you short the market and the market goes higher, or you long the market and the market goes lower, you can buy 8 shares, right? 8 shares, that's $250 if you're a short-term trader. If you're a long-term trader, same thing, right? If you think we're going higher, up 10%, maybe you can deploy some of your cash. If you think it's going to go lower, maybe you want to, trim some of your long positions or sell calls against them, or buy, some hedges, maybe gold, right? Gold miners pull back today, silver pull back. So very important question for going through these positive and negative visualizations, determine the stop loss and the determine position size. If you don't do that, most likely you don't track of number of positions, you don't track position size, and when you do end up on the wrong side of the trade, you have these larger losses that you anticipate, right? The idea is to have this constant amplitude where your portfolio can move, the size of your portfolio, right? Your portfolio size should never, move more than, I think 10%. Industry, most Money managers will tell you, I don't know, 15%, right? But whether it's 10 or 15%, that's your range. You never want to go outside of that range, right? You never want to, lose 30% or 40%, right? So that's number one goal of any money managers, right? Your drawdown, right? And the only way to do it is to go through the positive and negative scenario and make a decision, right? So this is key process that most new traders, most beginners don't do. I didn't do it in the beginning, but as time went on, I learned that without doing this process, you can't really consistently trade. You can become a disciplined trader or confident trader. So I always do this exercise in every live trading room, every time I place a trade. And I encourage you to do the same, right? If there's one thing you want to get out of today's presentation, is this process. Not a natural process from psychology point of view. Most of us don't want to think about negative, right? Why, if I'm going long, why do I, why think about 380, right? You're too negative. Well, it's not that you're too negative, it's just you need to determine position size. And unless you know what the drawdown is, you can't really decide on number of positions. So I encourage you to do that. So, but still, let's see how many of you think we're going higher. Type in 1. And if you think we're going lower, right, we're retesting March lows, type in 2. If you think we're going to retest, August high or break August high, then type in 1, 2 to 1. Small place, yes, sorry about that. Let's increase the size of the screen. 175. Okay. Okay, now, okay, thank you. Don, we still have a debt ceiling which upsets the market and result. Thank you, Don. Kevin. Job reports, time to trade options. Thank you, Kevin. Last night in his session, okay. Thank you, Kevin. Doug, I'm heavily invested in oil. What expect rise in WTI? What is your outlook? My outlook is the same thing whether you type in 1 or 2, right? So if you type in 1 on spiders, oil is going higher. China reopening, everybody, there's no recession. We can avoid the recession. If we can avoid the recession, unemployment low, everybody's traveling, manufacturing is expanding, services are expanding. Scenario 1, oil is going higher. And, if you said 2, then, WTI is going lower, right? You can't have, spiders continue to rally without energy, right? Because if the spider is going to go up 10%, that means most market participants believe we are not in recession. But if we're not in recession, we need oil, and oil already reached a 60 handle, right? Where everybody thought it's going to be 100 or 120 handle in the beginning of the year. There's a big disconnect, just like there's a disconnect with interest rates between what the Fed says and what the interest says, just like there's a disconnect between people are overly bearish right now, right? Market sentiment is extremely bearishness, but VIX is, almost not historic low, but way below historical average, right? There's big disconnects between what people think and what people do. And I believe that disconnect is usually an opportunity. So to answer your question on oil, if you said 1, oil is going higher, oil is going to 100. If you said 2, oil is going to 50, right? So that's my view. I always have top to bottom approach, right? A lot of people do bottom up, right? I don't care about anything else, I buy oil. Well, you have to care about recession or not, because if it's a recession, then oil is going down. It doesn't matter what OPEC does, right, or what Russia does, right? It's all about demand and supply. All right. Rules. I see some. All right, Kevin, thank you very much. All right, so we have 2, 2, 2, 2, 1. Martin, thank you. Going up 1. Okay. So we do have most people said 2. What about the rest of you guys? Ann, Arthur, Barry, Bob, Dave, Don, Doug, Jeff, John, Jayoti, Coffee, Mamadou, Martin, Michael, Rock, Conti, a lot of traders, Vitus, what do you think? 1 or 2? 2. Okay, most of you said 2. I also gonna say too, if you follow my blog, if you follow me in the live trading room, I'm bearish, right? I think there's a lot of overhead resistance. I guess we can get to August high, right? I guess that's possible. Probably unlikely. I think best case scenario, if CPI is better than expected, we still have a couple more weeks in April. We're heading higher, but very little. I think model is right. 420 is your overhead resistance. Obviously, pendulum swings to extreme. We can get to 425. Even if we get to 430, I'm not gonna lose my sleep over this. But I don't think we're gonna get to 440. I don't think we're gonna get to 430. I think, based on the news, best case scenario we get to core scenario, not best case, core scenario we get to 420. Right? Bob here. He always corrects me because I said best case scenario, and then I keep shifting this. Bob, different Bob. Okay, Bob is not here, but core scenario meaning that based on the news next week, CPI better than expected and Apple had decent earnings, right? Okay, we can, up 5%. We can get to this uptrend channel, right? Because we've been trading in uptrend, right? Since October of last year, this is a well-defined bullish uptrend, right? And that's the bull argument, right? That we're just going to keep riding this wave, right? Keep going in this channel. So, okay, most of you said two. My reason for two, again, the bullish argument and the reason bulls are in control since October, right? Big surprise I didn't expect for so long, is very simple. Unemployment is low and dollar is weak, right? And as long as unemployment is low and dollar is weaker than it was in the past, 15 months, there's no such thing as recession, right? Recession will not happen, right? Yeah, banks are failing. Yeah, there is liquidity issues, some money supply issues, but all of that is irrelevant as long as everybody has a job, as long as there's more job openings than there are people, and as long as everybody's traveling and commuting, there's no recession, right? So it's a very strong argument. But there is a disconnect in interest rates, right? There is disconnect. So my reason for being more bearish is that this disconnect has to, at some point, get resolved, right? We've been knocking on the door. Yield has been knocking on the door of this 3.3% for the past year, right? So for the past 12 months, we've been trading, higher most of the time, but we've retested this level many, many times. I don't know at which point we're going to break this level, but if and when, I think it's just a matter of when, not if. I think we will break this level sooner than later. Once we break this level to the downside, then, and we're sitting on the edge right now, right? I think the market is gonna pull back, right? As long as, like today, as long as yield is higher, right? The new correlation, when people sell their bond holdings, they're buying technology, right? QQQ is up 1.5% because people selling bonds because unemployment is low, right? But the yield, but the big disconnect between what the Fed says, right? Fed says we are at 5.25, right? 1 month's bill pays you, 5.5, but 2-year is under 4, and 10-year is 3.5. Because it's such a disconnect, something has to give, right? Either Fed at some point will start say, listen, yes, not only are we going to pause, but we're also going to pivot because inflation is low, right? Or Fed is going to lower the interest rate because we are in a recession, right? There's clear signs of recession and unemployment is rising, right? Fed is not going to lower interest rates. Either unemployment is going to start rising more than they anticipate, or inflation is going to drop to whatever their target, 2% target rate. Those are the two events that can push, Jerome Powell to lower interest rate. And if the unemployment is still low, that means inflation is probably going to still stay high. And that, conundrum that's being stuck between a rock and a hard place, I think is going to continue until something's going to give. Either the employment is going to give, or inflation is going to give. But unfortunately, you can't have lower inflation if everybody's traveling and spending, my wife spends $10,000 on a purse, right? So as long as Louis Vuitton is the biggest company and everybody's spending $10,000 on the Louis Vuitton bag, inflation is not going down anytime soon. So that's my reason for this, and it's just a matter of time for something else to break, right? Whether it's regional banks or it's oil companies or something else, but that's my reason. Okay, so I'm bearish. I think there's little room to the upside. There is more risk to the downside, especially from seasonality point of view. We are going into summer. Usually June, July, August, September, October, this is when things happen, right? Liquidity dries up, everybody is in Miami, everybody is on the beach drinking margarita, and anything happens in the market, you don't have liquidity, and you have these large moves, you know, up to the upside, to the downside, and I think there'll be moves to the downside. All right, how do we, so at Tradespoon, what do we do? So we do have different services that can help you trade, right? So like today, you can go in today and follow our live trading room, right? You can participate live in the trading room, or you can enter your phone, and if you're busy, we'll send you a SMS message and email every time I trade. And today there are, you know, few trades, right? Like Apple. So I got out of iron condor on Apple. So there's option trading like Apple. I trim my May bear, you know, we reached 50-day moving average. Usually 50-day moving average holds well. So I closed some of the bearish trade, right? I reduced my bearish hedge for QQQ May call spread, bearish trade on IWM, right? IWM reached 52-week low, right? This is, I think, solid bear argument. Bear argument is basically says, yes, we have reached the lows in October. We are 7 months. You know, if you believe in soft landing, if you still think that we are, in, you know, because usually what happens, you know, recession reaches some kind of a lows, right, in October, and 7 months later you have bull market, right? And we kind of in the bull market, a lot of indexes are above 20%, like QQQ. But then you have to have a broad-based participation, right? And right now, small cap stocks are sitting at the lows, right? Regional banks are sitting at, you know, pandemic low, right? Crude oil is, you know, breaking through 52-week low, right? So these are not signs of a healthy bull market, right? Usually, crude oil would be higher, small caps will be higher, and, you know, semiconductors are not gonna, you know, roll over and continue to make new highs, right, in semiconductors. So there are signs that this is not a bull market, that most likely that this is just a prolonged rally inside of the bear market. So I did close IWM bearish, reducing bearish trades because it kind of oversold. It's sitting on the key support. We talked about iron condor and some of the other bearish trades. So I aggressively close some of my bearish trades because I see that the market is oversold short term. For the next maybe a week or two, it's oversold. And I do want, if we do go back to, you know, if we do go back to 420 level, which could happen very quickly, right? I want to, you know, put more short positions. So that's Elite Circle. I encourage you to try the service out. You can get support resistance levels. You can participate live and get messages. We talked about Stock Forecast Toolbox, right? This is our artificial intelligence model that gives you trend analysis, support and resistance. Very important, very powerful tool. I encourage you to give it a try. And if nothing else, for making sure you don't overpay, right? Because if you buy it at 405, then you probably buying it at a discount. If you buy it at 410 when we already broke through 408, I think you're probably overpaying. You're probably overpaying. You want to wait till it pulls back to 405. During live trading room, you can see very often I trade ideas from Active Trader, right? So Active Trader, you know, LA Lilly, right? Model continue to pick up LA Lilly. It's obviously an incredible stock. You know, Alzheimer's, they have, you know, Alzheimer's pills that are helping with Alzheimer's. They're, you know, have these new pills for weight loss and for the, you know, diabetes. And, you know, model just continues to pick up stocks that are trending higher or potentially can outperform. I don't trade all of them, right? The idea is that you want to be careful, right? You want to be very selective about what you buy. And I propose not to have more than 4 positions. If you're new to trading, if you're new, you don't have a solid trading plan, you don't think you're a very disciplined trader, right? You're honest with yourself. So if you don't think you're a very disciplined trader, I propose to only have 4 positions at a time and 2.5% stop loss, right? And obviously, you know, I have more positions because I'm managing multiple services. And you have a lot of ideas, so you have to be selective. And if you don't know, then I suggest you participate in live trading room and you ask, right? Or you make your own decision. So active trader, there's always bullish trade ideas. Same thing, weekly trader, right? You go to weekly trader a little bit. Also neural networks, the model learns on behavior of the stocks, on patterns, makes prediction. This is more of a longer term. You know, Yum brand, right? So Yum brand potentially, you know, reach the support and continue going higher. So that's some of the models, some of the artificial intelligence that we have. Active trader, weekly trader, monthly trader. Again, you have stock and option ideas. We give you strategy A, strategy B, entry prices, exit prices, but you have to execute, right? If you're not sure, if you don't have a solid trading plan, you haven't been trading long enough, I propose you do participate live. I mean, you can have elite circle. We have shadow trader, kind of without live trading room. You can just follow my trades. We have options only, like premium and spread. This is options only portfolios. I mean, you can use stock if you want to, but I trade using options. We do have robo investor where, you know, it's stock only trades. So those are some of the services that we offer. I do encourage you to use our learning center if you're new to trading. There's a lot of content, PDF files to help you navigate or learn. If you want to learn about technical analysis, options, stocks, that's learning center, and market newsletter. Every day we're publishing either a video or a blog in terms of my opinion on the market and where we're heading, which can help you at least. If you don't have an opinion whether the market goes up or down or sideways, you can read my blog and it gives you another point of view, which is, you know, helpful. Questions? Occidental oil. And everybody's, I mean, I know every oil has been very well advertised on the news, and everybody has been very bullish on oil. And I mean, it worked really well last year, right? Or actually in the past 2 years, it worked really well. It hasn't really worked that well this year. And you know, before it was kind of inflation, hedge against inflation. Now we are talking about recessions. So as long as there is an uncertainty and probability of recession, I think oil is heading lower, right? This is just too far, too quick. I think energy is going to pull back, right? They're going to continue to pull back, and you can already see it in crude oil, right? This is not a bullish price pattern, right? We are sitting at this, we are basically at the pre-pandemic level, right? Crude oil was at 65 before pandemic started. This is exactly where it is now. And I think, I mean, I don't know if it's heading to negative, right? Like we had during pandemic, probably not. I don't think so. But I also think that this level will probably not hold. We're already knocking on the door of that level. And after we break that level, there's really not much room. You don't know where it's going to stop. I mean, maybe 40, maybe 50. You know, time will tell, but you know, not much support below this 65 level of crude oil. All right, thank you, Kevin. Kevin, next Fed meeting? I'm not sure when's the next Fed meeting. I think June. I'm pretty sure it's June. Next Fed. Yeah, it's June. So we have June, we have July, and there's no meeting in August, and you know, there's no meeting in November. But next one is in June 13th. Kevin, thank you for your question. Thank you, Kevin and Big Pharma. Should I wait to target on weekly trade or just sell if I have some profit? So Anne had a question, should I wait to target on weekly trader or should I sell some profit? There's no really clear answer, right? It depends on your portfolio composition, right? So the question, you're in weekly trader, right? And you haven't reached your target gain or you haven't reached your stop loss, right? So what do? You have to have a view on the spiders, right? So the way I usually look, I look at the spiders, right? This week, not a good price action. There is little room to the upside, right? There is more room to the downside, right? We can drop to 404. I mean, I guess we can go to 420. So depending how many positions you have in your portfolio composition, right? If let's say you're market neutral or you're slightly bearish in your portfolio and you have weekly trader, I would say, hold on to it. Bulls are in control. We might get to 420. It makes sense, right? If you have all bullish position, I would say, you know what, there is a risk we can retest. We've been retesting for 2 weeks in a row. We are retesting this magic line, right? This downtrend. Next week we might retest it again and actually break it, right? I don't know. And then this weekly trade will probably not work, right? So if you have a profit, depending on your portfolio composition, if you're bullish, I would maybe take the profit. If you market neutral, maybe close half of the position. If you're bearish, you have your hedges, so wait and maybe we'll get to 420, right? I mean, Apple hit a double, right? Where's Apple? Right, spiders is about 411. Right, we talked about 410. We've been trading this. Well, now it's 408, but 410, right? This 410, which we talked in the past couple of weeks. As long as we are above 410, the next level is 418, right? If we drop below 410, 409, okay, next level is 404. So we're kind of, it's a magic line, right? It's 404. And 418, right? So it's 14 points, 404 plus 411. We're at 50% retracement. 50% retracement, right? So if you see the next couple hours we're doing this, you're probably going to lose money on the weekly trader. If in the next couple hours it's going to do this, most likely you're going to make money on the weekly trader, make more money on the weekly trader. So that would be the approach, right? And we're right at that middle line. So it's a flip of a coin, right? By end of today, market could reverse and drop, right? Or, we continue going higher. Usually it goes higher, right? Unemployment numbers is low. Apple, everybody's buying iPhone, so most likely momentum will continue. But again, exiting and entering position is a personal decision. Model basically gives you guidelines, but you have to make a decision based on your own, how many shares you bought, position size, how many positions, your portfolio composition. Short-term market is oversold for next 1-2 weeks. Martin, from classical technical analysis, right? We touched 50-day moving average. We touched it last week, right? Sorry, we touched it on, last week, right? Held. We touched it here, we're held. So yesterday, the reason I closed a lot of bearish position because market was oversold, and usually 50-day moving average holds, right? Right now we're at 50-50, right? 50% retracement. So it's not oversold, it's not overbought, right? Literally, we have, what do we have? Monday. Monday, I don't think we have anything interesting. May 8th, yeah. Probably nothing. Tuesday, Wednesday. Wednesday, probably market is going to again trade, some kind of range, maybe just neutral. But then Wednesday, we're probably either going to, have a hard retest of 420, right? Or we're going to have a hard retest of 404 on Wednesday, right? Because inflation data, if inflation goes up, okay, then you have this again, fear of recession because rates are going to stay longer. If inflation drops significantly, then it gives ammunition for Jerome Powell to lower interest rates and avoid the recession. So, right now it's a flip of a coin, right? When you're at 404, you have higher probability you have a rebound. When you're at 416, 420, higher probability that it will pull back. When you're 50% retracement, it's a flip of a coin. So you can, flip a coin and decide what's going to happen. I mean, momentum trader will tell you, okay, we're above 411 as long as we're above that line, and the momentum is behind the bulls. Most likely we'll get to 416 by Wednesday. I would not be surprised if we're at 416 or 420. That's possible. Thank you, Martin. Kevin, thank you. SPR, thank you, and thank you. And Kevin just reminded everybody the old adage, sell in May and go away. Yes, I believe, the right strategy is sell in May and go away. A lot of market participants, you hear it on the news, a lot of people believe sell in May and go away, right? And just looking at this pattern, just purely from going back to geometry, right? Not geometry, what is it? Trigonometry, right? When we were taking, no, geometry, sine cos. No, it is trigonometry, right? So sine cosine, right? My daughter is taking calculus BC. She's a junior in high school, and I'm like, I have this shivers in my, right? All these derivatives and tangents, cotangents, and derivative integrals. If you just follow your trigonometry classes, you remember that this is how the waves work, right? Obviously, stock market is not trigonometry. Sometimes you have this type of deal, right? But you have to have some kind of catalyst, right? Some kind of fire, right? Going back to chemistry classes, right? If you do chemistry classes, if you want reaction to move, right? Products versus reactants, right? You have forgot what the, right? This is what products, no, reactants, this is reactants, this is products. So you gotta put some fire, not good in drawing fires, whatever. But you gotta put, if you want the reaction to move out of equilibrium, you have to light up a fire, right? And then, it can go this way or it can go this way, right? Your chemistry results, right? When you mix the, products and, you get the reaction. So you have to put some fire. So this is there's got to be a fire to push the market out of this range. And earnings season is winding down, I don't know what that fire is. So just purely like classical analysis, okay, then, something like this should happen, right? So, and we continue. Okay. What else? Mark, thank you. The remote beach, crude balls and mountaintop. Yeah, a lot of traders, probably don't want to hold a lot of bullish positions going into summer, and while you're in Miami, watching birds and swimming, you don't want to think about having a portfolio with no cash, right? So I encourage you, if you're in soft landing, maybe 30% of your portfolio in cash. If you're in hard landing, then maybe 50% of your portfolio in cash, right? So this is soft landing. You're in bull, you think we're going to go up 10%. Okay, 30% of your portfolio probably is on average, right? Depends on your age, risk tolerance, that numbers fluctuate. But let's say out of 1,000 people, 75% should have 30% cash, right? If you're on hard landing, I propose you raise cash, maybe 50%, right? 50% cash. Just in summary, portfolio drawdown, very important, right? I propose if you're new to trading, if you don't know when to get out of the trade, right? Because weekly trader give you a signal, you don't know when to get out. That's an issue, right? That is an issue. That means you probably haven't traded long enough. You don't really have a solid trading plan. I propose, very important to follow this rule. I mean, you can have 4 weekly positions. You can have, 2 long, 2 short. I wouldn't suggest have all 4 longs right now. Maybe you have 2 long, maybe you have 2 shorts, and you always go through this positive negative analysis. On a $10,000 account, you do not risk more than $250. And you do this over and over again from one quarter to another quarter, and you will see, you will build confidence. You will get that, you'll get into this memory muscle. You'll get into this rhythm, right? Free floating mind. Once you're in a free floating mind and these things come naturally to you, okay, then you can have more positions, maybe trade some futures, some options, whatever. But get into that free floating mind first. Allow more time, allow more space. Look at ABC pair and some of these items that we go over in the live trading room. All right, any questions? I think I covered most of the content I wanted to cover. Doug, thank you. I appreciate. Done. The debt ceiling. Market, one thing that's certain, there's one certainty in the market, that market does not like uncertainty, right? And there's a lot of uncertainty in the market. We have no idea how much, you know, distress are in regional banks. We don't know how the, you know, companies with weak balance sheet will react in the next few months, you know, whether it's energy companies or commercial real estate. We don't know about debt ceiling. We don't know about Russia-Ukraine war. You know, this week they put drones on, you know, Kremlin in Red Square. There were drones falling, you know, out of sky. Yeah, the market didn't react to it, but you know, that's a serious geopolitical issue that, you know, I mean, market doesn't think about it right now, but somebody does, right? So, you know, China, Taiwan, right? So there's always these uncertainty. There's just a lot of uncertainty in the market right now. And that's an issue, whether it's a debt ceiling or drones falling on Red Square, we'll see. Jeff, how will the battle between a strong economy and higher rates being resettled to the upside or to the downside? So Jeff, when earnings end, Martin, 75% of the earnings have been already announced. I mean, the earnings never end, right? I mean, there's a season start, kind of season end, but I think there's only 1 week out of the quarter where there are no notable earnings. But we're going to have earnings every week, right? Retail companies going to announce earnings in the next 2 weeks. But by end of next week, I think 90% of all the S&P 500 companies will announce earnings. By end of this week, it's either 75 or 80. So we're kind of winding down when it comes to S&P 500 companies. In terms of how will the battle strong economy versus higher rates? Well, that's why the Fed is stuck between, you know, the question was, how does this battle end between strong economy, right, low unemployment, strong economy, and Fed policy, right? It looks like, based on what Jerome Powell said, is that this battle, I mean, it could end well, or it could not end well, but, you know, at least I believe that as long as people are employed and the economy is strong, inflation will not go down, right? Why would landlords lower the prices if people are traveling and want to rent, right? Why would, you know, Louis Vuitton, you know, lower their prices for their luxury items? The only way you lower your prices if demand falls, right? When demand falls, you have recession, then inflation could be under control. And I think most economists believe that without recession, inflation is not going to go, I mean, it could trend down, but it's not going to go to the levels that Fed thinks are acceptable, right? That's why they don't want to, you know, when you ask them, can you just agree that 3%, you know, inflation is adequate? You know, they don't give you an answer, right? And the idea, because they believe that the only way to deal with inflation is strong contraction in demand, and we haven't had that strong contraction in demand. And you can see it, you know, when you go to a store or when you're trying to rent an apartment or buy a house, for that matter. All right. When earnings ends, Martin, thank you. So yeah, end of May. I mean, next couple of weeks, 100% of S&P 500 companies will. Inflation goes lower with going above 5%. Soft landing. If inflation continues going slower, right, and employment is not going above 5%, you can have a soft landing, right? That's what Jerome Powell said, right? Jerome Powell said that if you think recession is unavoidable, you're wrong, right? He said that we can have a situation where there is no recession. And I agree, if the inflation continues going lower, right, unemployment stays low, at some point Fed will lower interest rates and, you know, we have soft landing. but it's hard for me to understand how can inflation continue going lower if unemployment is low, right? That means there's no reason. People are employed, wages are high. Why would anybody lower the prices, especially when it comes to services section? Manufacturing, I get it. Manufacturing is down. Oil prices are down, steel prices are down, lumber prices are down. But that's already behind us, right? The services, the shelter, I don't think there will be meaningful improvements unless unemployment is going to tick up. All right. Kevin, yeah, I'm gonna write in my blog about Carl Icahn. Martin, is VIX historically is at 20, right? Average VIX historically at 20. We're below 20. That means, people are not buying hedges, and that's not good when there is a lot of level of uncertainty. Martin, crude oil support. It's this level, right? We're sitting at this multi-year level, right? If you look at since the pandemic started, right? We were at this level at pandemic. We were at level, when we had pretty sharp pullback, 30% pullback in 2018, right? When Fed started raising rates, we're right at that level. We're actually below that level, and we're right at the pre-pandemic level, right? So we're going back to almost to the penny back to December 2019, right? Right when the pandemic started in February. So that's your support, right? If we break through the 65, 62 level, well, nobody knows where the bottom is. Kevin, okay. Thank you for your opinion about Biden and Yellen and Powell. I will not repeat it out loud. Okay. Any other questions? All right, you guys been awesome, great. Thank you very much for participating. We do have a YouTube channel. Please, if you haven't, click on subscribe. Help our company out. It helps us with our marketing effort. When you like the page or when you like the video and you share it, it helps us tremendously. And hopefully the people that are reading this content, it will help them navigate this uncertainty and make profit along the way. All right, thank you very much and have a great weekend. And I will see you either at the closing bell or later on. Thank you.